Doing my pre-market analysis is the first step of the trading process. I want to have an idea what is the bias in this market. And as a price action trader, I need to follow price action rules. For that reason, I'm following these channels on the chart. What I can see that overnight session started with a strong bullish rally. We had a break of the bullish uptrend and prices created new extreme, indicating to me that this uptrend is temporarily over and now I can expect correction or possibly straight up reversal. Now when I'm judging this structure, I can see that the prices are working in a sideways structure and this is right now indicating correction. So we're not reversing just yet. We are in a correction, so that means I'm thinking about possible reversal down or continuation of the uptrend. Now when I'm looking at the structure like this, I have double bottom here, I have triple top here. This is a trading range structure. I can see that the EMA is getting flat and this is middle of trading range and I'm not interested in taking any trades. Notice we form a double top right here, triple top in total. We have first leg down. So right now what I'm focusing on is to get the second leg down to the range lows because that's what I'm following, the trading range rules. And notice what is happening. Prices are pushing back above EMA strongly and we're not stopping. Prices keep pushing higher and keep pushing higher. Okay, so this is the point where I need to stop and I need to analyze the chart again. Because right now this is not looking like a healthy trading range by any means. We came from the lows, but we keep forming bullish imbalance. That means that the prices are failing to go all the way down here and the bottom half of the trading range is completely empty. Also, if I'm going to take a little step back, I can see that this is starting to look quite bullish. So at this point on, I'm going to disregard the trading range because notice how we are pushing higher consistently. Even right now, we're breaking above this resistance and we keep creating series of higher lows consistently. So when I was watching this, this is where I drew my spike and a channel pattern, something like this. This is what I first had. And you guys can see how nicely right now it's depicting the structure. The high lows are formed. I see the bullish imbalance. And right now this looks like a spike and a channel pattern. This means that this is a bullish uptrend. And that means that I have to look for a high probability setup at the key entry point. I'm looking for two-legged pullback, second entry long, or a failed two-legged pullback, failed second entry short. And notice what is happening. Prices are breaking higher above the resistance and they're pulling back. And at this point on, look what I see. I see reaction off the key entry point. I see gigantic bullish bar. And when I came from this low right here, we have a first entry short, pullback, second attempt to sell, second entry short, failure at the exponential moving average. This is my first trade for the day, failed second entry short in a bullish structure. And right now the spike and the channel is confirmed. Now, there can be a question raised whether it is okay to go long at the highs right here near this resistance. And the answer is yes. When you're taking the trap, you want to take a look how tempting this setup looks for the other side. Now, this second entry short formed right at the resistance. It looks like a small little failed breakout. So you know that a lot of short sellers probably got trapped going against the overall trend. Because we started all the way down here. This is very strong bullish structure. And the fact that the trading range was negated and the spike and a channel is the pattern, I'm not paying attention to this resistance. And in fact, you know, a lot of sellers are going to get trapped here. And this is now great, strong momentum. And this is my first trade for the day, failed second entry short. So once I see range not being active, I see bullish imbalance because high lows just keep pushing higher and higher. This is where you can disregard this resistance. You can even delete it because at this point on, this is a strong bullish uptrend. But when you're taking a failure, take a look what it looks like for the other side. And you can guarantee that a lot of sellers got trapped here. And this is what pushed this market higher. All of these stops got taken out. You keep your stop loss one tick below the signal bar. And at this point on, I keep watching market just go higher. Now, when I'm watching this, I can see that we have a little bit overshoot, but it's possible that I may have drawn this slightly higher. So what this means, I'm right now playing this wider channel. We're pushing lower, we're pushing lower. Okay, so now we have correction. So what I have to do, I need to follow the shortened trend lines because I want to follow the trend line rule. After there's a break of a trend line, you expect to get new extreme. And notice what you have. You have a break of this channel, push above EMA, and you have attempt for new extreme. And this is the highest high of this entire move up. So from this high, I need to reset the count looking for longs, and I still look for high probability setups. This is now a clear bullish structure. Nothing else. I'm not breaking the rules, picking top. I'm not even thinking about selling. Selling is not on my radar. Only thing I'm thinking about is waiting for prices to pull back, letting the correction play out, and buy a high probability setup. And we have a new high, first entry long, pull back, second entry long. Small little bar, two-legged pullback, nothing overcomplicated, high probability setup. I didn't take this trade myself, formed a little bit too quick. I wasn't really ready, but it was such a small bar. I really need to act quick. But this is how you can see how you're playing the bullish structure. You're not even thinking about chasing the market all the way up to these highs. You're not picking top. You just wait for prices to come back and take a high probability setup. Now, as I was watching this, I can see that the prices are just pushing higher, and there's something wrong with this channel. I kept even pushing a little bit higher, but prices just get pushing higher consistently, and this is telling me that there's something wrong here. My channel is not correct. So what I did, I deleted this channel. I opted for this channel at first, a little bit steeper one. But also what I can do, I can see that the structure is getting a little bit steeper. So I can identify a steeper channel like this. Just gonna copy it, put it at the upside. This is how I'm approaching the structure as a price action trader. I'm just trying to find the best fitting channel. When I have multiple channels working hard like this, I'm not too bothered by this. I'm mainly focusing on the exponential moving average, and I can recognize this is a strong and clear bullish uptrend. So I'm not even complicating it. I'm not picking top. I'm just waiting for prices to come back. And you guys can see there are a lot of first entries on this chart, but these are too aggressive. They're not at the key entry point, not at the trend line at all. So these are not high probability setups. I want to take entries where prices have high likelihood of succeeding. You have a new high, first entry long, second entry long, but it's far away from EMA, downtrend in play. We have a break. And notice what is happening. Prices are pulling back closer to my trend line. I even had it a little bit tighter like this. I have a visual larger two-legged pullback. First leg down, pullback, second leg down. Looks like this. So this is starting to look like a larger visual two-legged pullback. But can I go long above this bar right here? I cannot. It is a tiny little bearish bar. Look what happened next. You didn't even get a chance to go long. There was a bullish bar forming. And had the bullish bar been at least half smaller, closer to the trend line, you could have entered here, and I was about to, but you didn't even get a chance. It instantly spiked up, and you guys can see how the key entry point reacted, and at this point on, it confirmed this key entry point that right now it is valid. So you guys can see how the price action is simple, nothing overcomplicated. You don't need to rely on indicators, just a simple two-legged pullback at the key entry point or failed second entry short. Prices kept pushing higher. At this point on, I was just looking for slightly wider channel. I didn't really pay attention too much to the overshoot because at this point, this is so strong. I'm still thinking bullish. I keep drawing my trend lines because I want to respect these corrections. And there's pretty much nothing else I can think about. I can see that the structure just keeps pushing higher. We're still far away from EMA. So unless we pull back to the EMA, I cannot take a buy entry. I cannot sell a top. So right now, I just wait this entire move go out without me. And sometimes what I have to do, another setup right here, far away from EMA in the middle of nowhere, not really something I want to take a chance on. Prices create a new high. First entry long, pullback, second entry long. Okay, so this is gearing up to be another high probability setup. So what's going through my mind here? I need to pay attention to the short-term channels like I did all the way down to here. And you guys can see right here, the second entry long is inside of this channel. If I go long here, I break the rule and I'm not patient. I need to wait, and you guys can see what would have happened. Prices broke lower. Had there been higher low above EMA, I would have gone long here. I was preparing my limit order. It never triggered. It pushed lower like here. Break, new low form, indicating that this downtrend played out. This long is very, very tempting because at this point on, structure is so bullish that once you have a break and a new low, you can expect and bet on prices pushing higher. However, it's below EMA, so it's a little bit more advanced. It's a little bit for more experienced traders who know what they're doing, but you guys can see visual two legs down and a break and a new low, indicating that it is safe to go long. What's better though is as I see prices pushing higher above EMA like this, confirming the bullish momentum, I am anticipating at this point on high low. High low that would confirm this larger two-legged pullback, and notice what you have. Perfect bullish signal bar. EMA keeps holding price, bullish structure, higher low, my second trade for the day. It took a little bit time, it was a little bit sweat, but eventually prices ticked higher, got my scalp, runner instantly stopped, and notice what you have here. New low, first entry short, second entry short failure, second entry short goes against the overall trend, new high formed, first entry long, second entry long. Two high probability setups in one. At the key entry point, is signal bar good? Signal bar is great. And your stop loss goes one tick below the signal bar. You enter at the highs of this bar or a couple ticks back, and this is a high probability setups, 2 setups in one, and you guys can see how easy it is to capitalize on these moves up once you're patient. If you manage to get in these trades, some of these trades form too quickly that sometimes it may be hard to catch. And notice what is happening. Prices are retracing, and this is still bullish structure, and they're approaching my key entry point. I had my key entry point a little bit tighter because I had the bounce of the key entry point like this. So what I have to do, I have to redraw my trend line. Also, what I can see is that this is a small trading range, but I'm not really paying too much attention to this, and I have a new high, first entry long, pullback, second entry long, similar setup to this right here, break, attempt to create new low, but 2 key entry points are holding price, decent enough signal bar, high probability setup. We can take this long right here, and it would have been a failure. And you guys can see this is completely normal. Taking a chance here on a setup like this is following the rules. It requires experience to skip this trade. What could have kept us away from this trade? There are a couple of clues, because if you guys take a look, notice how we are right now losing steam on the uptrend, and we are right now mainly going sideways. We're not trending higher so strongly. Right now we are forming a trend range pattern. We have double top, double bottom. EMA is getting flat. It's no longer pointing up. So by the time you get all the way here, it is a clear proven trading range, and you're going long in the middle of the trading range. You didn't really pull back down. But when I see such a strong uptrend and I see 2 key entry points holding price, this is where I definitely going to take a chance here. And you guys can see it would have been a failure. So don't beat yourself too hard about this trade right here. Every strategy has losing trades. You just have to keep executing on every single high probability setup, and in the end, you will win in the long run. Now prices are breaking lower, and you have a failed breakout here. I'm going to zoom out, and I'm going to remind myself the structure. This is a clearly strong bullish uptrend. First break of this big channel, and I expect to get new extreme for the uptrend. I'm following the trend line rule again. I'm not even thinking about selling at all. So as I see break, I'm waiting for prices to push above EMA. We keep pushing lower. I'm not fazed by this. I'm not particularly going to draw a wider channel like this. Why? Because it goes against the overall trend. With trend, uptrends are wider. Against the bigger trend, trends are tighter. So I stick to my downtrend, break, few legs to new extreme. And as I see prices pushing above EMA, this is great. This is confirming that we may get the new high, downtrend played out, and we have a high low. When I was watching this, I didn't even pay attention to this high low. I didn't take it seriously, but we can treat this high low as a confirmation of the failed breakout, because prices broke above this support, pull back, confirmed the failed breakout. So this right here is a slightly more aggressive entry, but it is a high low, because higher lows are confirmation setups of two-legged pullbacks, failed breakouts, or failed second entry shorts. So you guys can see decent entry to take a chance on. And by the way, why I'm not taking longs here? First of all, you never know where you're going to pick a bottom, because it looks rangy, but this is not a strong trading range structure. This is just temporary correction in an uptrend. So I don't want to pick support right here. You never know how many legs are going to push lower. This is not really a failed breakout just yet. We have a failed breakout here, but doji signal bar. I don't really just want to pick bottom just yet. I want to save easy high probability setup, which means I want to see prices push strong above EMA and confirm the bullish momentum. Now you have a new high, first entry long, pullback, second entry long, new low, first entry short, pullback, second entry short, failure. Same setup here, high probability setup, big uptrend. This one right here still needs to get new extreme, and prices are pushing higher. And once again, traders who are taking second entry short, they're probably watching a wider downtrend, but they don't know that you don't draw a wider downtrend on a corrections. You draw them with trend, overall trend. So right here, the downtrend played out. It's above EMA, so you don't want to go short anyway. And it's a nice trap, big bullish bar. Had this bar been smaller, you don't want to enter because it is too congested. But the way this bar completely took all these 4 bars out and was so strong, this is confirming the overall momentum, and now you can go long here. Now I'm going to draw a slightly wider channel like this, and we even have another high low of 2 key entry points. It is slightly more aggressive. I'm not going to mark it as easy because you need to know what you're doing here, but it kind of feels like a breakout pullback of this small little sideways area, breakout pullback. So I still expect for prices to attempt new extreme. EMA keeps holding price, definitely following the rules. Now finally prices created and reached new extreme for my main channel. So that means that temporarily I'm not looking for longs. I'm not looking for shorts either, because once again, zoom out, entire massive structure. I'm not even thinking about selling. I'm just waiting, because most likely once you trade up into such a trading range with such a strong bullish uptrend, you're most likely not going to reverse. Instead, you're going to get a correction and eventually continue working higher off that correction. So right now you guys can see I'm playing the trading range. I'm going to be drawing my short-term trend lines again. I see prices are pushing lower. Actually, I had it a little bit tighter like this. Yeah, I had it tighter like this. We have a downtrend working lower. We have a break and we have a new low. First entry short, second entry short. Can I go short here? I cannot. Why? Big bullish uptrend. We're at the bottom of the trading range and we made it all the way down here. So once you make it all the way to the support, you expect for prices to go back to the resistance. You traded up into this trading range, so you're most likely going to push higher. And I'm going to draw my trend line wider like this. So uptrend is still in play. So if anything, I want to look for failed second entry short. And I get a failed second entry short. Everybody got trapped looking for a new extreme of this downtrend. But you're not focusing on new low for the downtrend because you're playing the trading range rules and you're playing the major bullish uptrend. If anything, you're looking for longs off the lows and you're not really looking for shorts here. Even though you expect new low, in trading ranges, short-term channels may reverse without new extremes. So we have a failed second entry short that pushed above EMA. I will mark it. It's slightly more aggressive because 80% of this body is below EMA and you would really want to see prices to push above EMA. What I would like more here in this instance is to take a high low because you're going long quite into this and there's a lot of time going to be a pullback, and this is exactly what happened. Prices needed pullback a little bit. So had this higher low been much more bullish, this would have been a great entry, but this failed second entry short is definitely following the rules either way. So it's just a little bit more aggressive because it didn't really fully push above EMA, but structure is so bullish at this point on that you're pretty much betting on bullish structure. So what I can see, I'll keep drawing my short-term trend lines. I keep playing the trading range rule, break 2 legs to new extreme, keep drawing my short-term channels. Can I go short here? I still cannot. Overall context is bullish and I still stick with the overall context unless we get proven trend in opposite direction. If anything, I want to look for longs, but right here you're so close to these highs. You got a second entry long, downtrend played out, but so close to this resistance. High low here. Prices are eventually pushing higher, but this is horrible. Not really any clean entry. Congested area. So I'm just sitting, waiting patiently, and I see prices pulling back into string range. Okay, so we're finally breaking lower. I'm going to draw my shortened channel, and at this point on I can expect failed second entry long back into trading range, because right now we really pushed higher, failed breakout. Even though this is a strong bullish uptrend, since you're coming from the failed breakout, you expect at least a little pullback to the middle of trading range, possibly all the way down here. But 1 2 3 4 5 6 7 bars stacked next to each other. You have a failed second entry long. Now you have a break and new low. It didn't really form higher. It already created a new extreme. I cannot go long this late after 7 bars stacked. So unfortunately, I just cannot take this entry. And market right now is reversing higher. And notice what is happening. This is confirming the overall bullish bias. We can see we have a bullish imbalance just like we did in the initial trading range. And we have a push above EMA confirming bullish momentum. And we have a higher low. First entry short, pullback. Second entry short failure. EMA keeps holding price. And this is a failed second entry short, great bullish bar. High probability setup, because right now the push above EMA confirmed to me that I can wait and I can take a long entry because we're not going down because we already have a break and new low. So as prices are pushing higher, so going to zoom out a little bit, I can see there's a clear bullish imbalance. Prices just keep pushing higher. Keep drawing my shortened channels. EMA completely flat in the middle of these bars. I'm not even thinking at this point on. I'm not even thinking about setups. This is pure gambling. This is a pure congestion and you will get chopped into pieces. Don't be gambler. Wait for high probability setups. What do you do in this instance? You're coming from highs. Do you go short or you look for longs? No really clean entry. You're basically looking for longs mainly because it's such a strong bullish structure, but you don't really get no clean entry. You get a new low. Okay, you get a high low here, but you don't want to go long just yet. Look how stacked this is. Look how the congestion it is. And now you can see, you can expect to get a failed second entry short. Clear bullish imbalance. Potentially bullish uptrend that needs to get new extreme, and I see a failed second entry short. Context wise, great entry, 2 key entry points are holding price, but 7 bars stacked. I don't know. I can't really. This is a gambling basically at this point. Look at the structure here and compare it with the earlier structure. You're gambling. Even though this worked, it felt second entry short. Context wise, great entry because you pushed above EMA, confirmed the bullish momentum. First leg down, pull back. Second leg down, measured move. So the downtrend played out. Pushed above EMA, big bullish bar, but 7 bars stacked. Not really something I want to take a chance on. All right, so these are my 2 trades for the day. The first felt second entry short. I took a few points on the runner, and the second entry, the high low, didn't really produce any runner because I got instantly stopped and I didn't take any entry after that. So I'm gonna wrap it up and I'm gonna see you guys next time. Take care, everybody.